Today we are pulling back the curtain on how accredited investors actually get into great SMB deals and how operators raise equity without wasting months on the roadshow. My guests are Donza Worden and Travis Jamison, the founders of CapitalPad. Guys, thanks a lot for coming to the Holdco Builders podcast.
It's a real pleasure to be here. Big fan. Thanks so much.
Yeah, thanks for having us.
We cover a lot today, but first let's start with your origin stories. And Donza, please go first.
Yeah, perfect. So, Donza Worden, it's actually my second time on your podcast, so excited to be here. But this is through the lens of CapitalPad. And so my background is spent a year and a half in investment banking, and then spent the last 10 years in institutional private equity. So 3 years at a fund in Chicago, 7 years at a fund in New York. And around 2 years ago, I wanted to create my own thing. And so that was the start of Clear Peak Capital, which is an independent sponsor vehicle investing in IT services and software deals. And so through that, naturally came across the problem of raising capital. Built a skill set through my private equity career of being able to find deals, connect with co-founders and founders, and as well as bankers, but hadn't really had a skill set or been in conversations with LPs. And so there was an opacity on how do we ultimately fund these deals we find. And so had a conversation actually with my friend Travis in early 2024 about this problem statement. And I'll let kind of Travis give his side where he was looking for access to these types of deals. But that was really kind of the start of the idea of CapitalPad in terms of ultimately it's a marketplace that connects high net worth accredited investors with independent sponsors and searchers like the Clear Peak Capitals of the world, and to fund those deals. And so Travis, we'll let you kind of give a background on yourself and where the idea came from your point of view.
All right. So I pretty much took the opposite path of Donza. So Donza went into finance and accidentally fell into entrepreneurship. I went into entrepreneurship and then accidentally fell into finance. So started being a kind of a serial entrepreneur my entire career. I don't really love that term. Usually kind of screams like, I don't know, charlatan or amateur. I'm not exactly sure, but founded roughly about a dozen companies over the last 15, 16, 17 years. Everything from SaaS, e-commerce, health products, platforms, all over the place. No real rhyme or reason. And then had a few liquidity events about a decade ago, and those started stacking up. So started naturally allocating capital to more different asset classes and kind of stumbled in. I played in basically all of them, fairly active in the venture and angel space in a while. Was kind of like a complete tourist in the real estate industry for a bit, can rant on those. And then kind of stumbled my way back into what I call the small business space, lower middle market. And just my eyes were open. It's oh, this is actually this is the asset class I was after all along. This is what I want. And then from playing in that space, kind of CapitalPad was naturally born. And we can go into that as much as you want to.
Okay, and what was the first discussion you had? And from there, what problem did you see for first accredited investors from one side, and on the other side, people looking for capital for their own deals?
So the original thesis kind of started somewhat more selfishly. So I started initially with just the self-funded searcher space, and that progressed to the independent sponsor asset deals as well. And if you dig deep into it, there's all kinds of studies out there. We got the Stanford Search Fund study, the Citron Cooperman independent sponsor study or survey, as well as the SIG self-funded searcher survey. They all kind of say the same thing, that in aggregate, the returns of this asset class are phenomenal. They're basically the highest that exist for all the alternatives outside of, hitting an Uber angel investment or, buying Bitcoin 10 years ago. Outside of that, they're kind of the best. Ventures getting roughly 13, 14% IRR over the last decade. Private equities, roughly the same. And all of these asset classes are penciling in at over 30% IRR in aggregate, right? Not one deal, but in aggregate. The problem is, as the lowly individual, it's very hard to get access to these. And so I kind of discovered it. I was looking, it's wow, these deals are amazing, but I need to be looking at 30, 40 deals before I find one to say yes to, right? If you're only seeing 5 deals a year, well, that's not really good math. Also, the check sizes can be quite large, especially for the independent sponsor deals. If you're not writing a $1 million check, they won't even talk to you, right? And so for the individual, that's quite difficult. And so I was having some success in here, but I realized there was a a lot to be improved. And my startup hat came back on. I was like, I think we can fix this actually for investors. And around that time, I was talking to Donza, and he was looking at it from the other side of the problem. And we realized that we can make a marketplace that really fixes a lot of these problems.
And how long it took for you to go from this okay, let's do it, to actually having the first launch and having accredited investors signing up, people posting their deals? How long it took to you?
Yeah, I can. It's so I would say we started in earnest in January 2024, kind of February, and that was a lot of time getting the structure, getting the website developed in terms of the flow, what information matters, because ultimately we're a marketplace for sponsors to submit their deals and investors to evaluate those deals. And we're trying to create a platform that doesn't take a ton of time and attention ultimately from CapitalPad. And so there was a lot of time on what information is relevant, how do we want to kind of have that workflow be created? And then just as importantly, when you're aggregating all of these investors, what does that look at like on the back end? And so we did 2 minority deals, I don't know, April, May of 24. And then we kind of didn't formally launch the platform in August of 24.
We were able to soft launch, basically. We each had a network enough of people that were interested that we could kind of bring them these deals and like, hey, we love these deals. Do you like these deals? If so, let's make something happen. And we could even do it like off platform, the first one. It's just kind of like word of mouth. Here's the SPV docs. Here's the specifics. And then build a platform from there.
I think what's important about CapitalPad is we're definitely a more curated marketplace than probably what is typically out there. Fundamentally, it's up to the accredited investor to make a investment decision on what's on the platform. But we have a pretty high quality bar in terms of it has to meet this threshold to even get listed in the first place. So I think that's helped us with our kind of brand recognition, who we are, and when a CapitalPad deal comes up, a lot of people are taking a look as opposed to 20 or 30 being listed at one time. We really kind of list 1 to 3 at a time.
And
We had to make that decision early on, by the way. That we had to like very consciously like, are we going to be somewhat more of an open marketplace, or are we going to be very highly curated? And we decided to go with that route. It connected most and like aligned with what we thought was right. But also long term, we think that trust would be way more important if we're only curating and displaying the very best. I think it really aligns the incentives a little bit more.
And what about the numbers? Where are you today? How many deals? How many investors? What has been the feedback?
We're on our 8th deal at the moment. We just crossed the 1,000 investor mark, and we're growing every single day. The feedback by and large is people really like what we're creating. They're getting that aha moment. And the investor base is very different. Like all of them are, accredited investors, but some of them are, funds and family offices, quite sophisticated professional investors. Some of them are similar to me in my original background, entrepreneurs who had some success, or maybe, high paid professionals. So they're all over the place. But I think a lot of the aha moment is this is how people can basically build a holdco without building a holdco, right? You want to diversify portfolio of small businesses, which is what I wanted. This is basically the only way to do it passively. And that excites me. It's what I wanted for myself.
You mentioned that there has been a lot of this aha moment from the users. Obviously, it provides a huge value. So what is the fee for those users? One for investors, one for searchers? Like, is it too good to be true? How does it work?
Yeah, so we have a fee for, it's purely on the investor side. And so the searchers don't pay anything. Fundamentally, we want to incentivize the best and the highest quality deals to be on our platform. And so there's nothing from the searcher's point of view. From the investor point of view, it's one, providing access, and we charge 20% carry, and then a one-time closing fee of 1.5%. So 1, it's access. 2, it's the curation of the deals. And then 3, just as importantly, is we're pretty hands-on at the later stage of the deal closing. And so what this platform allows is it gives us CapitalPad leverage in the deal, so to speak. What I mean by that is if you have a check of $50,000 and you're putting that into a $1.5 million equity raise, you're really not going to be able to affect the operating agreement, any of that negotiation, or affect the economics. And so when we aggregate all of these checks, we have more leverage with the independent sponsor, with the searcher, in terms of what we care about. And now we ultimately follow market, but we certainly take a point of view on this is what market is in terms of the searcher's economics or the searcher's kind of rights and protections. So a lot of times the leverage of bringing all these checks together and going through that CapitalPad platform gives us the ability to really push for better governance rights. That's something we want. In some cases, slightly better economics from the searcher or independent sponsor. And so it's really kind of access, curation, and then an ability to get better governance and economics, ideally on the searcher and independent sponsor side.
You mentioned being highly curated. What's the ratio when it comes to, let's talk about the deals, like how many deals are coming in, the sponsors coming in, how many you say yes, how many you have to say no to, what are the reasons you say no to?
Yeah, I mean, I don't, we unfortunately don't have great dashboards yet on the numbers that we get, but I would say probably 30 deals a month, roughly. And I would say we have conversations with a half dozen. And so 24 get eliminated pretty quickly. And we get down to probably the goal is to list 1 to 2 a month. And so it's pretty selective. Fundamentally, we're not chatting with sponsors until post LOI. And really a lot of times it's post QOV, post securing of kind of some SBA or other leverage. And so a lot of thresholds have to be hit before they really kind of meet the platform just from a process perspective. And then when we're examining the deals, it really is case-by-case basis. We could look at some deals where there's 2 or 3, there is a lot of customer concentration, but there's a very kind of cogent story around why that's existed for a long time, why that will continue to exist, and we can get comfortable with it, but a lot of times we can't. And so it's not necessarily a quantitative checklist of, okay, if these 20 things are true, you get listed on the platform. There is a bit of a qualitative standpoint around it. A lot of companies will just look at the infrastructure side. If there's 4 or 5 people doing 10 million in revenue, it's a little bit harder for us to get comfortable with it because of the displacement risk of, all right, 3 to 4 people can stand that up. So it's not necessarily a perfect, like, all right, here's the check boxes. We do kind of take a more qualitative approach to it. But go ahead, Travis.
I can hop in. We're fairly agnostic about what we say yes to, about the industry, the beauty of the business, but we are fairly strict on the reasons we say no. And so that's what we're looking for. We're just looking for, not looking for a reason to say yes, we're looking for a reason to say no so we can just move on. And so we do have like a list of different things, cyclicality, lack of developed infrastructure, as Donza hinted on. Essentially, like, is it 3 people at the company, or is it like an actual business, right? Sophistication of the sponsor is a really big one, because sometimes maybe someone's a really nice operator, but they don't have enough sophistication around the edges in a way that makes us feel comfortable that they'll be able to execute something like this.
And it's really, yeah, just to jump in there, it's basic stuff sometimes where it's like, look, day one, the worst thing that could happen is that you don't fully understand kind of your cash flow cycle. And so it's pushing on the sponsors of, do you understand net working capital? Do you understand kind of how to build out a 13-week cash flow forecast? Do you understand that in 6 weeks, payroll's going to be here and you're going to have inventory that needs to be purchased 2 days later? And so it's really kind of understanding, do they get it from a strategy, all right, we can do this, to can we actually do the blocking and tackling of, you need to manage cash at the bank accounts. And so, and there's varying levels of sophistication. You've got bankers and finance people, consultants, operators, but there are a few kind of just, all right, check the box of, at the end of the day, cash is king, especially in the beginning. And so that's a one litmus test we do as well.
Yeah. We've got more if you want to go. We've got, like, what is the actual value proposition of the company? One that we've seen a lot, especially more the home services space, is we see businesses that maybe they're doing, $1 million a year, $2 million a year of EBITDA, but really it's just a website with some really good SEO, and they're sending it all out to subcontractors, which is a great business to start. But do you really want to buy that? Like, the value that it's in the actual business isn't necessarily as real. It can be disrupted a lot more. We look at concentration risk is definitely a big one. And that varies by industry. Some industries, it's more like inherently baked in and you get comfortable with that. But on average, when we look it out for the valuation, I think the valuation, we can talk on that all day. That's kind of one of the bigger ones, especially for me. Non-standard economics and governments, too much leverage is one. Like, we're not going to take a big swing here just on leverage. And then the last one is probably just like too challenging of an industry. Is an industry that we can or cannot understand easily? Or is it just an industry that we just think like, it's just really tough, right? Like we want to go for these easy swings. So that's kind of what we're going for.
So far you've said you've done 8 deals through the platform. Can you say that when there is a good deal, the capital will follow because it will be seen by so many investors?
For the most part, I think Donza, you might have a different perspective. For the most part, if a deal is good, the capital will flow, and we have a fair amount of confidence with how much we can raise for each deal, or how much not really raise, how much investors will invest on each deal. There are times that I think certain aspects of the business make it difficult for certain investors to understand. Right. Again, if it's a really basic, roofing business, everyone can understand that. Some of the more complicated businesses, it takes a little more sophistication or a little more knowledge on a certain industry to be able to wrap your head around it.
Yeah, and I think another aspect is our platform itself is growing very nicely. And so even 6 months ago, we had probably half the number of investors. And so our capacity to connect accredited investors with opportunities has increased quite a bit also. And so I do think our raise amount will increase too.
And from the CapitalPad perspective, it's a nice feature of being a platform instead of just a fund. Like we could have gone the fund route. We've talked about it, but as a platform, we keep growing. We can keep supporting more deals, more investors, and that like goes up every single day.
I will put the link as well. People can go and sign up and see how it all works. But maybe you can explain a bit for searcher point of view. Like they have a great deal, maybe they're listening and they're struggling at the moment with the fundraising. So that's a miracle that they're listening to this podcast. So what's the next step for them and how the process all works for them?
Sure. So on that, ultimately you sign up through the CapitalPad website and then you'll submit your deal. And so we have it's effectively a blinded teaser where you fill out this information. That teaser, along with a kind of a little virtual data room if you have a memo or other information. So you upload that all to the platform. We then do an evaluation. The CapitalPad team does an evaluation. If it looks interesting, we will set up a phone call, typically kind of 30, 40 minutes. We'll then talk as a group to see, all right, does this potentially meet the threshold? What are the kind of 2 or 3 things that we need to continuously learn? And so depending on then the next conversation, we have open things, we'll have another call and try to dig into them. Or if we don't have open things, we'll then start setting up a plan to list it on the platform. What that means is we'll fine tune what that teaser looks like and what inputs you put into the deal page. So we'll collectively fine tune that. We'll then create an announcement that, all right, we're about to be listing a new deal. We'll be doing a sponsor interview with that team. We then do a sponsor interview and we list that on the website. And so then you have the deal page, the virtual data room, you have a sponsor interview, and then that's when people really start kind of accessing the deal and looking into it. On average, we'll get 100 to 150 NDAs signed by accredited investors into the deal. We then have a messaging feature on the platform where if they have additional questions that your materials and interview didn't cover, that's where they'll submit those questions and you'll have a conversation on that. What then happens is people will select an allocation amount, the minimum for an individual is 25,000, and that kind of happens all within the platform. We typically have the deal open for 2 to 3 weeks, at which points we close down the deal, and the amount raised is then finalized. And we then monitor, all right, when is closing occur? We'll call that capital and then invest it. That'll be into one SPV, and then we invest that into the searcher independent sponsor deal.
Okay, and on the investor point of view, the deals you've done so far, how has been the feedback post-acquisition? Because you do all the analysis and they eventually commit the capital. So how has it been post-acquisition for them?
I think everyone's been fairly happy with how things are going, right? These are really good businesses that we're curating here. And these are really talented sponsors that are trustworthy people. So the results have been really good thus far with that. I think the investors are pretty happy with it. The only thing that we had to deal with, which is very normal in all of these, is that sometimes you have to nudge them like, oh, it's time for a report, right? It's time for like a quarterly update because they get so deep in the weeds of the business, they kind of forget to send that out. That's been about the only problem that we've had.
Yeah, so we're working on kind of a better process on quarterly updating. Most of the sponsors have been good with that to distribute on one of them. I think a lot of the deals are early to tell from a performance standpoint, but again, no big hiccups out of the gate. I have heard horror stories of obviously day one closes, 3 weeks go by, and it's like, all right, something's not right here. And so done a good job on protecting against that. But again, these are smaller businesses with high potentials for returns. There's an element certainly of risk there, and it's continuing to monitor and ensure that the deals don't go sideways. But everything's been good so far, and pretty excited with what we're seeing.
Travis, you said early in this podcast that you can now actually build a holding company by investing various businesses. Has any of the investors already done it by investing more than just one company already?
Oh yeah, several investors invested in several, for sure. And then that's probably the best way. Like when I look at this asset class in general, so the SBA gives us a little bit of data on failure rates, and I think what they hint at is roughly around 10%. I personally like to double that to 20%, right? So if you're only investing in one or two of these, probably in math would work out, but it's a lot riskier, right? Maybe you hit a dud because there will be failures. There will be failures in the CapitalPad deals. We don't know which ones they are. We haven't seen any hints of that, but eventually there will be. So it definitely makes sense to diversify between them. And so several investors are already doing that.
Now you see not too much, but still reasonable amount of data from the deal side. How is the current state of SMB M&A at the moment based on the data you're seeing coming to CapitalPad?
Yeah, I mean, it's from our point of view, it's still healthy. I don't know if we're a representative of the market though, because our platform itself is growing very nicely. And so whether we're taking market share or the market is doing well or growing, it's hard to kind of disaggregate that. But we're continuing to see good quality searchers, good quality deals, and looking forward to listing a few more here within the next couple of weeks.
People ask that question a lot, like, "Oh, is the market getting frothy? Are you seeing anything crazy?" And no, not really. Certain industries like HVAC, the great example, like those are priced pretty highly, but we actually don't see a lot of those. And if they did come our way, we probably wouldn't be comfortable with a lot of them anyway. We don't really want to overpay and reach for a lot of this. So it's actually surprised us of how normal the market has seemed in aggregate.
And when it comes to the deal flow, do you see more like first-time searchers or already a seasoned one with their deal number 2, 3, 4, 5? How is the ratio?
Yeah, mostly first-time searchers.
If we talk about someone listening again, what have been some of the mistakes maybe you've seen those searchers are making when approaching CapitalPad or prepping the deal? Or is there anything you would like to bring out when it comes to them going to raise capital from retail pretty much?
Yeah, I think there's a certain expectation of sophistication from our standpoint. And so there's different participants within the searcher and independent sponsor landscape in terms of doing a little bit similar to what we do. Some of those marketplaces, funds, and so on and so forth, they'll connect with the searchers at the searching stage or the IOI stage or the LOI stage. We really do expect that the searcher has an ability to take it to an executed LOI, to understand what a QOV is, to understand what the process and timing is. And so I would say doing your homework and knowing kind of, all right, how do deals progress and what matters is important for us. There's different participants in the market, right? And so we're trying to differentiate ourselves as post-LOI, kind of the quality searchers and sponsors that pretty up to speed on the space overall.
Now, trying to maybe give some advice to each side of the marketplace. And let's say there are some more Travises who had their liquidity event, they sold their company, they're listening to this podcast, they're like, this is fascinating. I would like to see this deal flow. And they're, let's say, first-time investors in such companies. What should they read or what risks should they consider, and what maybe, if we can say, mental model they should look when it comes to those people behind those companies who found the deals for them? Maybe some advice for those people, first-time investors.
There's no one right portfolio for anyone. That is very variable depending on an individual's circumstances. Someone's liquidity in life matters a lot, right? These deals are inherently illiquid. Most of them don't pay any distributions regularly. Some of them do. So that is one thing to watch out for. Another is someone's personal exposure already, right? Maybe someone has a lot of exposure to like healthcare. Maybe they don't want to do healthcare deals. So it's really hard to give like a blanket answer of what they should be looking for as they enter into the space. I feel like I was going to go somewhere else with this and I don't remember.
No, it's all good.
No, I mean, I think that is the right answer though, is that everything's going to be very personal and kind of what their personal balance sheets look like, their personal risk appetite looks like, and there is an illiquidity component to this. And so the belief that you put in 1 to 2 million and in 2 years, yeah, you can exit that's probably not going to be the case. And so kind of understanding and recognizing with eyes wide open is important, not to kind of beat our own drum. But I think what we are a bit different in terms of we have a quality bar. We only put certain deals on the platform that we think hit that quality bar. And then we also further kind of help create leverage to negotiate better governance and economics at the sponsor level. And so really kind of finding someone to help in that regard is important. Especially if this is your first time into private investing, your first time into kind of alternative investing. I think that's an important aspect too.
You setting the quality bar very high. Are all those deals which get represented on this platform get the funding?
Do they have we? Yes.
Okay.
The only ones that haven't are when the deals end up kind of not closing. And so typically there's kind of some seller dynamic that's happened. So that's happened with 2 deals.
Yeah. That's not been on our end. That's been on just the deal falls apart for whatever reason. And those usually hurt everyone involved.
That's fascinating. Soon you can give maybe after doing 100 deals, you have more data. You can give almost like guarantees. Like when they get through you that they will be on the website, they will raise the capital.
No guarantees. But definitely we can show data of what's occurred.
We do have a high level of confidence. If it's approved by us, then we have a high level of confidence of roughly the amount that we can raise, at least within a range. So that definitely gives sponsors a little bit more confidence there.
This is awesome. Is there anything you would like to add when it comes to the product, when it comes to the flow for each side, or is there anything you'd like to add? I think we covered it all.
Yeah, I mean, I think that's effectively it. I think one, we're continuing to think of how we can innovate, and so fundamentally, what we like about our model is we're highly incented to do good deals, and so we're only taking carry off of from the investor standpoint, and doing a good deal is what matters. And so we're figuring out ways how to really kind of effectuate change at the portfolio level. And so Travis's background is on sales and marketing and SEO optimization. And so a lot of these businesses are local market, effectively small local market economics, where if you end up owning a 50-mile catchment area, you can kind of win disproportionately to your competition. And so Travis can come in and just mine local kind of website traffic for your HVAC, for your restoration, for your pool repair business, and really kind of push the dial, so to speak. And so that's just one example. We're also thinking about kind of how to help facilitate FP&A and finance functions. And so I think this is more early stages, but I think as we continue to build out our portfolio, we want to look to how we can really effectuate change. So going back to that holdco model, is we could have functional expertise across various different functions and be able to deploy that into the portfolio is what is on the roadmap.
Yeah. So we're working on all of that already. We're keeping some of that like close. We're not really being too open about what we're building just yet because it's pretty exciting. But through these deals that we've done, we've got to be fairly hands-on with some of them. Again, some of the companies like they haven't really needed our help. They know what they're doing. They just kind of take it and run, and we get our nice quarterly update. And others we've been like very hands-on is in terms of like vetting their agencies for them, making introductions. I've personally been in the code of a couple of these sites, like fixing it up, changing it, just things that I know like this will make a massive difference in the business almost immediately. Let's just do this. And so we're kind of, the more reps that we're doing here, the more that we're seeing the levers that we can pull that can really help a lot of these searchers and sponsors along the way. So we're just building this into processes and internal teams to really help with that change. Because the more that we can affect the outcome of the business, like we all win, right? The searchers and sponsors win, our investors win, we win personally. And we know that we can actually do that with certain areas of the business, not all, right? You got to be in the thick of operations regardless, but there are a lot of things that we can help change. And so we're building towards that and making it more systematic versus like the one-off that we've been doing now.
As there are more and more people signing up on the investor side, soon you're going to have 2,000, 3,000, 5,000. Do you ever see that some of those investors would be more than happy to pay maybe a monthly fee or just a premium just to see the deal first? Because when doing this podcast on X, people reaching out to me all the time that we just need more high quality deals. And as we just previously discussed, that the deals you've had there are no guarantees, but there is a high likelihood that they will get the financing. That means these are good businesses, as you said before, Travis. So do you ever see that there's going to be such a high demand on your site that maybe some investors would just come to you like, guys, I'm happy to pay premium, just send me the deal first before showing it to the 1,000 other people?
At the moment, I don't think that's in the cards. We haven't really thought that far, right? When we've 10x'd our investor base, we don't know what it'll look like. Most likely, if we 10x our investor base, that we'll get 10x more deals presented to us, right? We kind of become the magnet where all the deals are coming to us. So we'll have more deals to share with everyone. I don't know if it feels quite right to me to have people pay for priority access. I think
Misalign our incentives a bit as well.
Yeah, and that's kind of how we went with the business model to start with, right? Sponsors can't pay to be on our platform, which they can with others, and fine, it's fine, but like it doesn't really align with what feels right to us, and so we're just doubling down on that. That's like our North Star with all of this. I mean, quite literally, when I look at these deals, like, is it a deal that I want to invest in? Because I've literally invested in every single deal thus far, and I plan to continue that for as long as I can. Like, that's our North Star. And so everything that we do around that is based on that. And so that really aligns the incentives with everything that we do.
Well, one thing from an investor standpoint, Mick, is on the roadmap are if you have an investor with expertise in XYZ industry and they want to lend that expertise to a searcher, or they want to be slightly more active than just kind of a passive portfolio or passive holder of a minority share, then we want to be able to facilitate that access also. And so that's certainly on the roadmap and one way for investors to kind of differentiate themselves. And so I think that could be an interesting angle as well.
Okay, guys, I think you've built an awesome product. Thanks a lot for sponsoring what I do. I hope it has brought some leads. And thanks a lot for sharing the story. And I hope we can do it again very soon, because more and more people, both searchers, investors, should listen that this platform exists.
Well, thank you for doing what you do. This is providing a lot of value to a lot of people. So definitely appreciate it.
Right.